You know, there's a slow killer in the market, and most traders don't even know it's eating them alive until their account balance starts whispering the truth. They think it's the market, or the broker, or bad luck. But it's none of those things. It's something quieter, more dangerous. Today, we're talking about the one thing that destroys traders slowly. And if you caught the previous video on the 2 worst times to trade, you'll already have a clue why timing isn't the only thing that can ruin you. It's what you do between those times that tells the real story. You see, most traders think failure happens fast. One bad trade, one wrong call. But the real damage doesn't happen like that. It's slow, it's subtle. It happens one compromise at a time. A trader makes a small mistake, ignores a stop, averages down, takes a trade he shouldn't, and then says, "Just this once." You ever told yourself that? Just this once. That's the poison. When I was a young man, I learned the hard way that markets don't destroy traders. Traders destroy themselves. A man can study charts all he wants, read the tape till his eyes blur, but if he doesn't have control over himself, his trading days are numbered. You can't chart your way out of weak discipline. The market is a great teacher, but it charges tuition in losses. It tests not your knowledge, but your patience. You ever noticed how, after a winning streak, your guard drops just a little? You start to think you've got it figured out. That's the beginning of the slow rot. Complacency. Overconfidence. A trader forgets that the market is bigger, older, and wiser than he'll ever be. The one thing that destroys traders slowly isn't bad trades, it's bad habits. And bad habits grow in silence. They don't blow up your account overnight. They chip away at it while you're not looking. It's that tiny voice that says, "Let's just hold a bit longer," when the chart says to cut it. It's that little itch to jump in because you're afraid of missing out. It's impatience pretending to be intuition. I remember times when I'd watch a stock move without me. I'd sit there, fingers twitching on the ticker, thinking I'd missed the train. I'd jump in late, only to see the move exhaust itself. The chart hadn't lied. I lied to myself about what I was seeing. The tape was honest, I wasn't. Tell me, have you ever done that? Pretended a chart said something just because you wanted it to. Every time you do that, you chip away at your trading character. And make no mistake, trading is character. The market rewards those who can wait, who can watch without acting, who can sit with cash and not feel useless. Cash to the disciplined trader is a position. But to the restless one, it burns a hole in his pocket. That's the slow destruction I'm talking about, the erosion of patience. A trader can lose money and recover it. But once he loses patience, he loses his compass. You can't read a chart clearly when your emotions are in charge. The best trades often appear when you least expect them, when you're calm, detached, observant. But if you're forcing trades, the market senses it, and it punishes greed faster than it rewards discipline. Now, remember how in that last video, we talked about the 2 worst times to trade, when emotions are running high and when you're trading out of boredom. Well, this ties right into that, because boredom is one of the main breeding grounds for the habit that destroys traders slowly. A bored trader trades for action, not for profit. He trades to feel alive. But the market isn't a casino. It's a weighing machine, and it weighs your impulses more than your ideas. And I'll tell you something most won't. Every losing trader I've met over the years shared the same sickness. Not ignorance, not lack of talent. Impatience. They couldn't stand not being in the market. They feared being left out more than they feared being wrong. And that's why they stayed poor. If you can't stand still in this game, you'll never last. The great fortunes were made by men who knew how to wait, who knew that no man can make opportunities, he can only prepare himself to see them. When the market's not clear, you step aside. Let others play. Let them fight the noise. You'll be there when the picture clears. But most traders don't do that, do they? They think every moment out of the market is a missed opportunity. They think the goal is to always have skin in the game. But the truth is, the market rewards inactivity just as much as it punishes action. It's what you don't do that often decides your success. Let me ask you something. When was the last time you didn't trade for an entire week, not because you were afraid, but because you saw nothing worth risking your capital on? If your answer is never, then that's your danger sign. The market doesn't care about your need to be active. It doesn't owe you a setup, and it doesn't hand out profit for effort. It only responds to precision. The slow destroyer we're talking about, that creeping impatience, it also affects how traders build wealth. See, wealth in trading isn't built by compounding trades. It's built by compounding good judgment. You make a big profit not because you traded every day, but because you traded right on one of those days. The rest of the time, you stayed out. You ever notice how the big winners always say the same thing? My big money was made in the sitting. They weren't exaggerating. The hardest thing in trading is doing nothing when everything in you screams to act. That's where most fail. Not because they can't read the tape, but because they can't read themselves. That's what destroys traders slowly. Not bad luck, not bad picks, but bad patience. They decay from within, one impulsive trade at a time, until all that's left is frustration and regret. The market didn't take their money. They handed it over, thinking they were buying experience. And experience, my friend, only matters if you learn the right lessons. The market will keep teaching you the same one until you finally listen. Emotional trading disguises itself as intuition. That's one of the cruelest tricks the market plays on you, because it doesn't just steal your money. It steals your clarity. It makes you believe you're acting on experience when in truth you're reacting to fear or greed. You think you're reading the tape, but you're really reading your own emotions reflected on it. Every trader has been there. You feel it in your gut, that sudden urge to buy, that uneasy feeling when you're about to sell. You call it instinct. But is it? Or is it your emotions trying to pass themselves off as wisdom? I've seen more traders destroy themselves by mistaking emotion for intuition than by any bad system or faulty strategy. The market's full of clever men who can chart price action, calculate risk, and talk about probabilities all day long. But when the moment comes, when money is truly at risk, their discipline vanishes like smoke. They stop being traders and turn into gamblers with a good vocabulary. You ever felt that shift yourself? That moment when your plan goes quiet and your pulse takes over? Now, don't get me wrong. Intuition has a place in trading. But true intuition is born from observation, not emotion. It comes from long, patient study, from thousands of hours watching the tape, seeing how price behaves, how volume speaks, how trends mature and fail. Real intuition whispers. Emotion shouts. And that's how you tell them apart. The emotional trader moves because he feels he must. The intuitive trader moves because he knows the odds are in his favor. One acts from restlessness, the other from readiness. And the difference between those two is the difference between staying in the game and getting wiped out. I remember once watching a young trader who thought he had a gift. He said he could feel when the market was about to turn. At first, he got lucky. A few times, the market moved his way, and that convinced him his gut was some kind of compass. But the market loves feeding a man's ego before it breaks him. Soon, his gut told him to double down when he should have cut losses. His intuition told him to hold while the tape screamed to get out. A few weeks later, his capital was gone, and all he had left was a story about how the market betrayed him. The market didn't betray him. His emotions did. You ever notice how your emotions always sound right in the moment? Fear sounds logical. Greed sounds reasonable. Hope sounds disciplined. That's what makes them dangerous. They wear the mask of sense. A trader sees a stock pull back slightly and says, "I'll hold a little longer, it'll bounce." He's not analyzing, he's hoping. But hope has no place in trading. Hope belongs in prayers, not in positions. Real trading decisions come from facts. Price action, volume, trend structure, support, resistance. Not from how much you want to be right. When emotion steps in, it bends those facts to fit your wishes. You start seeing patterns that aren't there. You start calling noise a signal. Tell me, how many times have you looked at a chart and convinced yourself it was setting up perfectly, only to realize later that you saw what you wanted to see. That's emotional trading in disguise. You're not following the market. You're following your own reflection. And that's the most dangerous mirror in the world, because it tells you what you want to hear. When you feel that urge, that sudden surge of confidence or fear, the best thing you can do is pause. Step back. Ask yourself, if this trade didn't exist, if this setup wasn't tied to my ego or my last loss, would I still take it? If the answer isn't a clean, cold yes, you're probably being emotional. The market rewards cold logic, not hot blood. You see, true intuition isn't emotional, it's mechanical. It's what your subconscious builds after watching enough price movement, after burning enough hours studying how the market behaves. When a skilled trader feels something, it's not a guess, it's recognition. He's seen this pattern before, hundreds of times, and his mind connects the dots faster than he can explain it. But that kind of intuition only grows out of discipline, patience, and experience, not excitement, fear, or ego. Most traders mistake familiarity for intuition. They see a setup that reminds them of a past winner and jump in without waiting for confirmation. That's emotion pretending to be experience. The tape hasn't confirmed, the volume hasn't spoken, but their heart already has. They say, "This one looks just like the last time I made a killing." And that's exactly when the market teaches them humility. Trading is like standing in front of a mirror that shows your own weaknesses magnified. Every decision reveals who you really are. The calm trader survives because he knows how to separate what he feels from what he knows. The emotional trader fails because he lets his feelings pass for truth. The market exposes both. Immediately and without mercy. You can't trade successfully until you stop lying to yourself about what you're feeling. You can't call fear intuition or hope analysis. Every time you do, you build bad habits that will cost you more later. Remember, emotion doesn't kill traders in a single day. It poisons their judgment slowly. One small emotional trade becomes another, and before long it's their normal behavior. And once that happens, no amount of strategy can save them. If you can learn to spot the difference, to pause when you feel excitement, to question your gut when it burns too hot, then you're beginning to trade like a professional. The professional's edge isn't secret knowledge or insider tips, it's control. He waits until his mind is cool enough to hear what the market is actually saying. He lets his intuition work, but only through the filter of patience and proof. That's the quiet truth the market tries to teach you. That your emotions aren't wisdom, and your gut isn't always right. They'll talk to you all the time, but most of what they say is noise. True wealth in trading comes from restraint, not activity. That line might sound simple, but it carries the entire truth of this business. Most traders think wealth is built trade by trade, tick by tick. They think the more they trade, the more they'll earn. But the market doesn't reward activity, it rewards accuracy. It doesn't care how hard you work. It only cares how well you wait. You ever noticed how the traders who can't sit still are usually the ones always chasing a loss? When I was young, I thought being busy meant being successful. I'd sit in front of the ticker all day, scanning, hunting, pressing buttons just to feel like I was doing something. I wanted the market to move, and if it didn't, I'd go find something that did. But what I didn't understand then, what I learned through years of hard tuition, is that wealth doesn't come from constant motion. It comes from selective action. The fewer trades you take, the more each one should mean. The market gives the patient man a chance, but it breaks the restless one. The difference between those two men is restraint. One knows when not to trade, the other refuses to stop. And that refusal is what drains accounts slowly and quietly. You ever caught yourself placing a trade you knew wasn't worth it, just because the silence was unbearable? That's the sickness of overactivity. It's the illusion of productivity in a business that rewards inactivity. The best traders I've ever met didn't talk much about their wins. They talked about the trades they didn't take. That's where the real money is saved. You see, restraint isn't just about not trading. It's about protecting your capital until the odds are truly in your favor. Every time you stay out of a bad setup, you're actually earning by not losing. That's how professionals think, not in terms of how much can I make, but how long can I preserve my stake until the right moment arrives. Wealth in trading isn't measured by frequency. It's measured by compounding sound judgment. If your trades are built on weak setups, your account becomes a collection of mistakes waiting to mature. But if every trade is deliberate, thought through, aligned with your plan, then you're building wealth, even if you're not trading often. The irony is, the traders who trade the least often end up making the most. Now, restraint isn't easy. It goes against human nature. We're wired to act, to chase, to fix. The market, though, doesn't reward those instincts. It punishes them. It's a game of waiting, not rushing. And the longer you've been in it, the more you realize that your success depends not on your ability to trade, but on your ability not to. A trader once asked me, "When do you know it's time to take a position?" I told him, "When you're bored of waiting." Because real setups don't come every day. Most of the time, you're just watching, waiting for the tape to show its hand, for the trend to form, for confirmation to appear. The problem is, most traders don't like to wait for the right pitch. They swing at every movement, every flicker, every rumor, and that's why they strike out. You ever think about how the big moves, the life-changing trades, don't happen weekly or monthly? They happen a few times a year, maybe even less. The rest of the time, the market is noise. If you're busy reacting to that noise, you'll never be around for the real opportunity. Restraint is what keeps your capital ready for the big swing when it finally comes. And restraint isn't just financial. It's emotional. It's the ability to hold back when your ego wants to prove something. To sit on your hands when everyone else is chasing. To admit that sometimes the best move is no move at all. Every trader says they want to win big, but very few have the discipline to wait for a trade that's truly worth winning. The rest settle for scraps. When I studied the old tape, I noticed something that never changed. The big operators, the real professionals, they didn't trade for action. They traded for position. They waited for price to come to them. They didn't chase. They prepared. They moved when the odds were loaded, not when they were guessing. That's restraint in action. It's quiet, invisible, and incredibly powerful. Think back to the last time you broke your rules. You probably did it because you couldn't stand being on the sidelines. You told yourself the setup looked good enough. You rationalized it. That's what destroys traders over time. Not the losses themselves, but the habit of breaking their own boundaries. Restraint protects you from that decay. It turns discipline into profit, not through winning trades, but through avoiding bad ones. You can tell a trader's maturity by how comfortable he is doing nothing. The beginner thinks the goal is to trade as much as possible. The seasoned trader knows the goal is to preserve capital and strike only when everything aligns. One plays the game daily, the other plays it like a sniper. And in the end, only one still has ammunition left when opportunity truly knocks. Wealth built through restraint has something special about it. It's sustainable. It doesn't vanish overnight because it wasn't made overnight. Every dollar earned that way is anchored to patience, to study, to self-control. And because of that, it lasts. The trader who builds wealth through activity might rise fast, but he falls just as fast because his foundation isn't discipline. It's impulse. Restraint also shapes the trader's mind. It teaches you that not every signal deserves a response, not every movement deserves your money, not every idea deserves your attention. It sharpens your perception, quiets your impulses, and builds confidence in your judgment. You stop chasing the market and start letting the market come to you. The market will always tempt you with noise, with little moves that look like opportunity but aren't. The trader without restraint will jump every time and bleed slowly. The one with restraint will watch, wait, and then act with conviction when the tape confirms. That's where true wealth begins. Not in doing more, but in learning when to do nothing at all. Cash is a position, not an absence of opportunity. That's something few traders ever learn until they've lost enough to understand it the hard way. Most people come into the market thinking that if they're not in a trade, they're falling behind. They believe that money sitting idle is money wasted. But truth is, cash is the most underrated position in the entire market. It's your shield, your ammunition, your clarity. It gives you time to think when everyone else is reacting. You ever felt that restlessness when you've been out of the market for too long? That urge to just take something. That's what ruins traders. I learned early in my career that the worst trades I ever made were the ones I forced. I couldn't stand being flat. I felt useless when I wasn't holding something. But the market doesn't pay you to be busy. It pays you to be right. Holding cash doesn't mean you're out of the game. It means you're waiting for the pitch you actually want to swing at. There's power in waiting. Cash gives you that power. It gives you freedom. A man without cash has no flexibility, no patience, no control over his decisions. The market can smell desperation. You see, when you're fully invested, your judgment changes. Every tick feels personal. Every dip feels like a threat. You stop reading the chart objectively because you need it to move your way. But when you're sitting in cash, you can see the truth clearly. The market looks different when you don't have money trapped inside it. That's when you start noticing how many bad setups you used to force. You ever noticed how clear the tape looks right after you've sold everything? That's not the market changing. That's your emotions stepping aside. Most traders hate being in cash because they think it means they're not working. But trading isn't about constant motion. It's about precision. The best work you'll ever do as a trader often happens when you're not trading. When you're watching, planning, waiting. Cash is the position that lets you do that. It's not a pause, it's preparation. Cash also protects you from the most dangerous enemy you'll ever face in this game, yourself. When you're holding a bad trade, emotion starts driving the car. You justify, you rationalize, you hope. But when you're flat, you can't lie to yourself the same way. You're detached. You can see what's actually happening. Cash gives you that detachment, the distance you need to think clearly. It's hard to be objective when your capital is bleeding on the screen. Some of the best traders I've known spent more time in cash than in trades. They understood that opportunities come in cycles. There are times when the market is clear and times when it's cloudy. When it's clear, you strike. When it's cloudy, you wait. The amateurs do the opposite. They push hardest during confusion and rest when clarity finally appears. That's why the market keeps taking from them, not because they're unlucky, but because they're impatient. Think of cash as your weapon in reserve. It doesn't win battles sitting in the open. It wins because it's there when the real fight begins. The traders who blow up their accounts always have one thing in common. They're all in, all the time. They think sitting out means missing out, but the real pros know the opposite is true. Sitting out means surviving long enough to win when the right moment finally comes. Cash gives you optionality. It gives you the ability to act when you choose, not when you're forced. You can buy strength or weakness, depending on what the market gives you. But if you're fully committed at all times, you've lost that ability. You're at the mercy of your own exposure. And the market doesn't show mercy to the overexposed. You ever seen how quiet the best traders are during dull markets? They don't chase. They don't talk much. They're waiting. That's the sound of professionalism. Silence when there's nothing to do. Cash lets you be silent. It gives you patience. It buys you time. And time in trading is worth more than any position. Another thing most traders forget, cash compounds too, just differently. Every bad trade avoided is capital preserved, and preserved capital is future opportunity. When you stay in cash during dangerous conditions, you're not missing profit, you're protecting potential. That potential is what lets you step in when everyone else is forced out. The man who still has cash when the market turns is the man who writes the next chapter. The funny thing about cash is that it never lies. Stocks can deceive you, charts can trick you, but cash just sits there, honest, still waiting. It doesn't promise anything, but it doesn't take anything either. It's pure safety in a world built on uncertainty. That's why holding it takes strength. Weak traders chase noise. Strong traders hold cash until something real shows up. It's also worth remembering that cash changes your psychology. When you have it, you think better. You trade better. You're not trying to make back losses or prove something to yourself. You're not rushed. You're calm. You're deliberate. But when you're stretched thin, every move feels urgent. You start making choices from a place of fear, and fear never produces profit. There's an old saying, "He who can be out of the market and not feel poor is the one who will end up rich." That's as true today as it was 100 years ago. Wealth in trading isn't built from constant exposure. It's built from constant readiness. Cash is the position that lets you stay ready. It's your insurance against the unknown, your space to breathe, your reminder that opportunity is earned through patience, not activity. So the next time you find yourself restless, wanting to jump into something just to feel engaged, remember, cash isn't a failure. It's a decision. It's your strongest position when the market doesn't make sense. It means you're waiting for clarity, not chasing chaos. And in trading, clarity is the only real advantage you'll ever have. Impatience is the silent killer of every trader's progress. It doesn't roar, it whispers. It creeps in quietly, one small decision at a time, until you look back and realize that all your mistakes had the same root. You just couldn't wait. Every trader starts with dreams of freedom, of building wealth from skill and insight. But the path from dream to reality is lined with waiting, and that's where most stumble. They can handle the charts, the numbers, even the losses, but not the waiting. You ever notice how hard it is to just sit and do nothing when the market is moving? That's impatience talking. When I began trading, I thought success was about speed. The faster I acted, the quicker I'd profit. I'd jump into trades without confirmation, exit too early, re-enter too late. I mistook movement for progress. But trading isn't about motion, it's about timing. The tape rewards those who wait for the right moment, not those who chase every flicker of opportunity. The truth is, most traders lose not because they can't analyze, but because they can't sit still. Impatience takes many disguises. Sometimes it looks like confidence, that urge to enter before the signal fully forms. Sometimes it looks like fear, exciting too soon, afraid of giving back a little profit. And sometimes it looks like boredom, taking trades just to feel involved. But no matter how it shows itself, it always costs money. The market doesn't punish the impulsive immediately. It lets them dig their hole slowly, thinking they're doing fine. That's why impatience destroys you quietly. You don't even realize you're doing it until you've already given back weeks of gains. The great traders, the ones who lasted, all shared the same trait: they waited. They didn't rush. They knew that most of the market's time is noise, and only a few moments truly matter. You have to sit through the noise to catch the music, but that's exactly what impatience won't let you do. It convinces you that being out of the market means missing out, when in truth, being patient is what prepares you for the move worth catching. You ever caught yourself looking for trades even when there's no setup? You flip through charts, hunting, forcing something to look right. That's impatience pretending to be diligence. You're not analyzing, you're craving. You want to trade, not because the market is giving you a signal, but because you can't bear to wait. That craving is the beginning of every big mistake. Impatience also affects how traders handle profits. A patient trader lets a position grow, giving it the space to mature. The impatient trader grabs his gains at the first sign of success. He thinks he's being smart, locking in profits, but he's really just afraid. Fear and impatience walk hand in hand. He sells too early and then watches the stock keep climbing. He curses himself for missing the move, so the next time he holds too long. That's how impatience turns discipline into chaos. The irony is, the market teaches patience through pain. You can read every trading book ever written, but you won't learn patience until you've felt what happens when you act without it. The market punishes those who can't wait. It forces you to learn that doing nothing is often the best move. It's not laziness, it's control. The ability to sit still when everything in you screams to act. That's real strength. Patience in trading isn't passive. It's active observation. It means watching without reacting, studying without forcing, holding your capital like a weapon that only fires when the shot is perfect. The impatient trader wastes ammunition on every noise that looks like movement, and when the real target appears, he's got nothing left to shoot with. The hardest lesson to accept is that most of the time, there's nothing to do. The market doesn't hand out opportunities on your schedule. It moves when it wants, and your job is to wait until it aligns with your plan. Impatience wants shortcuts, but trading doesn't have them. Every big winner you've ever read about had one thing in common. They waited for their moment. They weren't in the market every day, but when they were positioned perfectly. Impatience also kills confidence. Every time you act too early, you teach yourself that you can't trust your own discipline. You start doubting your methods. You tweak systems, change rules, chase new strategies, thinking the problem is technical. But it isn't. It's emotional.